Hello, everyone. My name is Brittany Button, and I'm a long-term care insurance specialist at Art Jetter and Company. Today, we have the pleasure of being joined by John Thomas of Amada Senior Care. As you know, during this session, we're going to discuss what Medicare and Medicaid will pay for in terms of needing care, or I should say, what it won't pay for. This is also going to include recent changes by CMS, changes to senior care options, and tools to help understand the importance of planning. But before I turn it over to John, I just want to mention that if you have any questions throughout the presentation, you may go ahead, type those into either the chat or the question box, and we'll be addressing those at the end of the presentation. So without further delay, John, let's get started.
All right. Well, thank you, Brittany. Good afternoon, everyone. So thrilled to be with you this afternoon. And Brittany, thank you again for inviting me on to share. So Brittany and I have known each other for a number of years. Throughout my career, I've worked with a couple of different insurance carriers, and I've called on Brittany and worked with her over my years as an insurance carrier rep. And then in the last year, I joined Amada Senior Care. So you might be wondering, how I made the jump from working at insurance companies to a senior care company, and what is going to be valuable for you as an agent or an advisor hearing from a senior care company. Well, I was big in long-term care insurance planning, and I did some financial planning and then life insurance and long-term care insurance planning when I worked at that carrier or those different carriers. And I realized that there is a natural intersection, or there should be an intersection between what we're doing and the planning that we're doing as advisors and agents and senior care, right? I really think of it as the phases of retirement, right? And I realized as I was growing in my career that we're really focused as agents and advisors and planners. We're really focused on what I like to think of as phase one of retirement planning, right? That's the accumulation of assets, the investment of assets, right? And then we think about getting our clients to their distribution years, right? That we're going to distribute assets. We're going to plan for a certain amount of retirement income, and we're not often addressing the costs that come towards the end of life, or what we call that phase two of retirement, right? That phase two of retirement is where we start to slow down, where we need a little bit of a help and support, and eventually we may need to provide or pay for some care. And that care cost comes with a need for additional income, right? And how we plan for that income impacts our overall financial plan. And so, through that discovery and talking to folks in the senior care industry, I realized that there should be this natural intersection for us to have a conversation to bridge the gap between insurance planning and retirement planning and what the aging process looks like and senior care process looks like. So I joined Amada Senior Care just this past year, and have really been engaged in educating agents and advisors about where there is room to partner with the senior care industry, right? Where there's room to partner and understand what senior care looks like a little bit better, so you can help your clients plan and prepare a little bit better. So in our time today, I'm going to talk a little bit just briefly about who Amada Senior Care is, and then get into the senior care industry, what's going on with government programs, what's happening in trends with long-term care insurance and caregiving, and then where there's an opportunity to partner with a senior care industry or partner with Amada Senior Care to bring additional value and additional benefits to your clients. I think that you'll see will be meaningful in helping you plan. All right, so who we are, Amada Senior Care. Amada Senior Care was founded in 1997 by Taffa Jefferson. Taffa was a NFL player. He did a short stint in the NFL. He played for the Bears, and then he got injured. And so he couldn't continue to play. He got cut from the NFL after his injury. And his mom was a caregiver, and he decided that he was going to jump into caregiving, and he built this caregiving industry. And very quickly in his development and start of the business, he realized that long-term care insurance is critically important. By 98, he had his first long-term care insurance client, and he began to understand that long-term care insurance is the best funding source for caregiving costs, right? And what we've found over the number of years that we've delivered care in home to families is that folks that have long-term care insurance receive a higher quality of care, and they're on care longer. And one of the reasons for that quality of care, if you can imagine what typically happens, and I'll take you into a family home or a family dynamic and situation that we encounter a majority of the time, right? And we have agencies around the country. We've got about 180 offices or agencies in 43 states currently. We're in most states, but New York and Wyoming and Montana, some of the upper Midwest or Western states. But what happens is a family is their mom or dad or a senior's in the hospital. They go to the hospital because they fall ill, or they're chronically ill, or they fall and have an injury, right? And then the hospital discharges that senior, and they call son or daughter, and they say, hey, we're discharging your mom or dad. You've got 24 hours, or maybe you've got 2 days to figure out how to care for mom or dad at home. And so we typically get a call from that family member when they're in a urgent need for help and care. Well, if that senior, if that mom or dad, that aging person has gotten to the point where they've fallen and they end up in the hospital and they're getting discharged, it's already too late to prevent that acceleration of the chronic illness event, right? Because they've already gotten to the point where they've been forced to be hospitalized, and now the level of care that they need at home is extensive, right? Because they've fallen, they've broken something, they need an extensive level of care, probably care with 2, 3, even 4 activities of daily living at home. Now, folks with long-term care insurance, because they have that protection, and they're not writing that check, right? They're not stroking a check every month to pay for a caregiver. Because they have long-term care insurance, they're more likely to file a long-term care insurance claim and receive caregiving support early on when they first start to need that support, walking and getting in and out of bed and help with baths, right? Before it gets to the point where they can't care for themselves and they've fallen and they've really critically injured themselves. And so, the outcome for folks that have long-term care insurance tends to be a little bit better because they've planned and they have that insurance coverage. They're getting a benefit from that policy, and they're not having to write that check. It's amazing. It doesn't matter how wealthy somebody is. If you have to write a check for 10, 12, 15 grand a month, that's a big number. Nobody likes writing that check, right? So folks that don't have long-term care insurance, it seems like they most often wait too long before they start to recognize the amount of care that they need and have an honest assessment or honest conversation with family about the care that they need. So we began partnering with long-term care insurance to deliver a better outcome for families. And that's allowed us to be long-term care insurance experts really in the market and the industry. And we partner with agencies such as Art Jetter and provide free long-term care advocacy. It's one of the things that we do because we believe it does give that better outcome to seniors. For folks that have long-term care insurance and they've gotten to that point where they're ready to file a claim, we know that claims process is not the easiest process, right? And sometimes it takes a professional that understands what the long-term care insurance carrier is looking for to advocate on behalf of that senior and help them file that claim and file that claims process. And so some of the things that we do, we are a home care agency. And so we provide non-medical in-home caregivers across the country. And non-medical really means that we're providing the kind of care that long-term care insurance pays for, right? That's activity of daily living support. So helping folks that need support getting dressed or taking a bath or even feeding themselves, right? Or they need support going to the doctor with their medication management. So that kind of support is what our caregivers provide. If there's an individual that maybe home isn't the best place and they need to go to a community or facility, we provide placement services. And so we help them find a room inside of a nursing home or a community, a senior community that's right for them. Sometimes those beds are hard to come by, and so we have connections to those communities and can help them find the right place for them. We help put technology in the home for families to be able to monitor and feel like their loved one is in good shape. And then financial assistance, right? Whether it's long-term care insurance claims or government benefits like the VA, how to best maximize maybe retirement benefits that they have. We look holistically at their financial resources and help them make sure they have the right plan to pay for care. All right, so a little bit about what Amada does. We'll jump into the senior care industry, and many of you, you know, if you've been in this industry for any amount of time, I know you've heard the term silver tsunami, right? It is the baby boomers that are entering this retirement phase. I think it's up to 30,000 an hour are turning 65. I believe that's the latest stat that I've heard, but we know that there are nearly 60 million seniors in 2022 of this baby boom generation, right? It's going to grow to nearly 70 million in 2027, and that demographic is growing by 20% in the next 5 years. And that demographic is going to be the demographic that's going to need care soon, right? We already know that there are a number of challenges within the senior care industry, and so with this incoming tsunami, what is going to be the challenge? And so I'm going to talk through what it looks like from a care perspective, but then also from a government perspective. And so there have been a number of trends within Medicare and Medicaid, and specifically what the government's action is about. And this focus, or this, I think, perspective that the government is taking is kind of coloring all of the programs that the government has, whether it's Medicare or Medicaid, and even some of the state-run programs to fund care and pay for care for seniors. There's been a shift to Medicare Advantage, right? The traditional Medicare plan is now, I think it's about represents about 40% of the plans that seniors have, and most seniors, over 50%, are choosing a Medicare Advantage plan. So that is growing. I think in the next 5 years, you're going to see that a strong majority, if not 80%, of folks have a Medicare Advantage plan. Medicare and the government is shifting costs from the consumer, or to the consumer, from the hospital system or the payer. And so what we've seen is that the government has been a fee-for-service, had a fee-for-service model historically. And what that means is that, you go to the hospital, and the hospital system or the clinic or whoever is providing care just bills the government, bills Medicare for the services provided. And so that led to a number of different things, right? That's hospital systems and providers were running up a bunch of unnecessary services so that they could charge for those services. And so the government has needed to curb that fee-for-service model. One of the other things that they've realized is that hospitals and skilled nursing communities or facilities are extremely expensive. And so there's been a push for care to shift from the hospital as much as possible, and from skilled nursing communities or facilities to the home, right? So that if someone's in the hospital, we're going to try to discharge them as fast as possible. We will pay for a home health nurse to visit them at home, maybe an hour each day or a couple of hours a couple of times a week to continue monitoring them and providing care. But we want to get them out of the hospital. We want to get them out of skilled nursing because those facilities cost so much. So there's this push to drive folks home. I mentioned fee for service. So fee for service was managed by the federal government, of course, through Medicare and CMS. There really was no cost containment. The goal was to force cost containment through contracts, right? That we're going to do these big contracts with big hospital systems, and we can control those contracts. But the government was somewhat of a disconnected payer, right? And now we're shifting to, and this is really post 2010 and the Affordable Care Act. We're shifting to a what they call a value-based approach. And that value-based approach is coloring all of the changes in these programs that we're seeing, right? That this value-based approach is a Medicare spend per beneficiary, right? No longer can a hospital just say, hey, we're going to charge for all these services, a fee for service. Now, Medicare is saying we're going to pay you a certain amount for that individual, so that as a provider or a hospital, you're responsible for their care, and managing the cost of their care well. In addition to that, they are penalizing hospitals if that senior or that individual is readmitted to the hospital within a certain period of time. And so hospitals are really focused on reducing readmissions. And so there's hospital readmissions reduction programs that are happening. You know, the government knows that the hospital is the most expensive place to receive care. And so they want to disincentivize, and they're going to penalize the hospital if they don't provide enough care for that senior to stay home and not be readmitted to the hospital. There's some accountable care organizations, ACOs, that kind of govern some of these programs. And the end goal is to really spread the risk reward with providers, right? That the risk is that if you don't do a good job and those seniors are coming back to the hospital, you're penalized, right? But there is a reward for providers, you know, that they're paid, they don't face that penalty, right? If they can care for those individuals well. And there is some additional reward for those providers through Medicare Advantage. You know, Medicare Advantage, because it is somewhat privatized, as privatizing Medicare, those systems can reward providers that are doing well. Now, one of the other things that drove Medicare to change, right, is fraud. So you have, you know, a number of years ago, you saw these stories all over the place, right, that Medicare fraud rings were running up millions, hundreds of millions, if not billions of dollars in fraud. You saw this a little bit throughout the Southeast and all over the country, really, that there were these shell provider organizations or operations that were really empty buildings. There was an address with an empty building, and that empty building was somehow racking up hundreds and hundreds of invoices to Medicare for fraudulent charges, right? Running up this fee-for-service structure to Medicare, and this is one of the reasons that they're tying all of their reimbursement now to specific beneficiaries and not just for services and the outcome of those beneficiaries. So this is going to continue to change as Medicare is really watching the outcome of care for these for individuals and seniors. COVID had a big part to do with this as well. So during the COVID period, they accelerated, Medicare and CMS wanted to accelerate how quickly they could get folks home, right? That, you know, 40% of COVID deaths were in skilled nursing facilities, and that includes nursing homes. It spread like wildfire, unfortunately, through nursing homes and skilled nursing facilities. I think at one point, you know, the occupancy in nursing homes went from nearly 80% down to in the 50% range, right? As folks were unfortunately dying due to COVID, and then families that could take their loved ones out of nursing homes did because of that COVID exposure. And so the Medicare and CMS developed what they called their SNF skilled nursing facility to home diversion program, where they were rewarding skilled nursing facilities for how quickly they could divert residents or patients from that facility to the home. And so this has continued, right? That started a model, it started a trend. CMS saw how much savings there were in delivering care in the home, sending home health nurses, you know, for a couple of hours a week to check on individuals, to provide a little bit of care in the home, but, you know, keeping them out of the facility. So this is going to continue to grow. This push to provide more care in the home and less care in the facility. There are some additional government provider partner programs that are taking place. And what the CMS is recognizing is that you can incentivize private providers to provide additional care at home and be responsible for the outcome, right? And that's going to save CMS some money. You know, Medicare, Medicaid, there have been projections about them becoming insolvent. And I've got a couple of slides on what those projections look like. But to stave this off, you know, most of CMS and Medicare and Medicaid programs are starting to gear towards care in the home and managing better outcomes and keeping folks out of the hospital. An audience or a patient group that is costing CMS some of the most money are individuals with dementia and Alzheimer's. the incidence of Alzheimer's and dementia has increased by 70% over the last 15 years, the last decade and a half. And so Alzheimer's diagnosis are increasing dramatically. Alzheimer's and other organizations are doing a ton of research about the reason for the increase in Alzheimer's and dementia. Some would say it has something to do with our diet and other factors, but the crux of it is that this risk is continuing to grow, and it's costing CMS and it's costing the government a ton of money, right? And so one of the new models that CMS has introduced just this past summer is they introduced what they call the GUIDE program. It is a CMS program, and GUIDE stands for Guiding an Improved Dementia Experience through strengthened partnerships. And so CMS has launched this, or they announced it last summer, and it's actually going live July 1st. And for key providers who have gone through the process and become approved to be a CMS GUIDE provider, will be able to provide CMS paid resources for individuals with dementia and Alzheimer's diagnosis. So someone with Alzheimer's or dementia diagnosis can get caregiver support and education for their family members. Medicare is going to pay for respite. They're going to pay up to $2,500 per year for respite care for the family members of those that have Alzheimer's and dementia. There's some paid care coordination and management that CMS is going to pay for through this program. And again, this goes live July 1st. So anyone that is Medicare eligible or Medicare age with an Alzheimer's or dementia diagnosis will now have access to some of these additional CMS paid resources. And really, it is fantastic for seniors with Alzheimer's or dementia. But the goal of CMS, as you can see the trend here, is they're trying to keep folks out of the hospital, right? Because if that individual doesn't have access to resources, if their family doesn't have access to someone they can talk to get guidance and help, if they don't get a break, right, then that senior declines more quickly, and that senior ends up in the hospital or in a skilled nursing facility. And so the goal here is to keep folks home. The goal is to curb the big cost by providing some smaller services to family members to keep these individuals home. I mentioned Medicare insolvency. A few years ago, this was the projection, right, that the Medicare Hospital Insurance Trust Fund would be depleted by 2026. The Social Security Disability Insurance Trust would be depleted by 2032, right? And you see some other things there. This is, the trend is going to be curbing those big picture facility costs, providing more care at home, so that the CMS can curb their costs and keep Medicare and keep Medicaid solvent. Now, a lot of what I'm focusing on here is Medicare driven, but Medicaid follows suit. Now, Medicaid historically has provided most of their services through facilities, right, through skilled nursing facilities. Historically, Medicaid, if you were on Medicaid and you needed long-term care, it was going to be in a nursing home, and a nursing home that had Medicaid beds, and that typically wasn't the kind of place you wanted to be, right? Many of you may be familiar with those facilities. I've had family members that ended up in a nursing home because the family had limited assets, and that was the only option. Medicaid, through different state programs, is focusing, similar to Medicare, on delivering more care in the home where possible. And so you'll see that trend continue. More and more Medicaid benefits will be available for folks to receive care in the home. Now, to address some of the challenges in this landscape, right? So we talked about what Medicare is doing and Medicaid. There are some headwinds and some challenges to home care and the government delivering care in the home. One of those was COVID, right? So the pandemic drove families home. Nearly 60% of adults over 50 report being extremely or very concerned about the impact of COVID on themselves and their families. So, that drove a lot of folks home. There was a little bit of folks that after COVID went back to the nursing home or back to skilled nursing facilities, but they have not completely recovered in terms of occupants from the effects of COVID. COVID also drove caregivers out of the sector, right? Caregivers are essential workers, and they are exposed because they were around seniors, the vulnerable population. And so it drove a lot of caregivers out of the sector, and home care providers have not fully recovered from the effects of COVID and driving caregivers out of this industry. And then finally, the pandemic drove wages higher. As essential workers, you may be familiar with caregiving and caregivers, but as you can imagine, that isn't a highly paid job, right? They're essential workers that are providing non-skilled or non-medical care. That is unfortunately a low-paying job, and so when wages were driven higher, that's beneficial for caregivers, right? Because what we recognize is you're putting them at risk. They're in the home with seniors who are vulnerable to COVID, and that there's a big risk with that, and so it drove wages higher. But with that, it's driving costs higher. And so you'll see in a slide here what the increase in cost effect has been over the last number of years. But COVID didn't just affect caregiving, right? It affected the entire labor force landscape. Just for example, I think this was taken in 2022, that McDonald's was offering $22 an hour plus a free iPhone in 2022 because everybody was competing for these essential workers, right? Essential workers didn't want to be in public spaces. A lot of folks were staying home. There were some government benefits to stay home. Starbucks has always offered college scholarships, but they kind of increased some of their benefits. Minimum wage discussions are taking place, and so this continues to put a squeeze on this labor force that home care and caregivers are pulled from. And so this is from a study of national home care agencies. And it surveys most of the home care agencies across the country. It's a study called the Home Care Pulse that's taken annually. And this past year, the top threat facing home care providers, this really took off just as COVID was taking place, but it has continued even up through this present year, that caregiver shortages are the top threat. 75% of home care companies struggle with caregiver shortages. There's not enough caregivers to provide the care that's in the community. Even beyond that, 75% of agencies turn down clients because they did not have the caregivers that they could provide the care. And that's 75% turn down caregivers or turn down clients. But even beyond that, over 50% of agencies have had to consistently turn down clients because they did not have the caregivers to meet the demand. So that is, that's a concern, and we're just early in the silver tsunami, right? We're already having a consistent caregiver shortage, and this silver tsunami is looming ahead of us. That these folks are retiring, but they're not quite to the point where the bulk of them are needing care, and so this is only going to increase as an issue. I think I've heard that there's a five, on a low end, I've heard estimated we need an additional 5 million caregivers. I've heard it as high as 15 million caregivers are going to be needed to provide the level of care in the home that's anticipated with this silver tsunami. And so you'll see this is reflected in the increase in cost, right? I'm sure your clients ask you, and as folks are thinking about planning for this phase of life, when they slow down and they're going to need some help, and they're going to need some help in the home, right? What does care truly cost? From 2018 to 2022, the cost of care has increased by nearly 25%. And so, the cost of care is typically segmented in how long the caregiver is in the home, If you have a caregiver coming to the house for a 1-2 hour visit, maybe to help with a bath, maybe help with getting dressed in the morning in a short visit, in 2022, that's now costing $40 an hour. If that caregiver is in the home for a shift, a 6 to 11 hour visit, we're talking in 2022, that's over $30 an hour. And so you can imagine to that family that is potentially needing that care 6 hours a day, every day, or they have a caregiver come to the house, 6 to 8 hours a day, 3 times a week. That's a significant cost on a family that does not have assets set aside to pay for this care specifically, or does not have long-term care insurance, right? As we're helping folks think about this stage of life, insurance carriers are also thinking about this. There was a great piece written by Ramona Neal, who has a publication called The Living Benefit Review. And one of the things that she talked about recently, this is November 28th of last year, is that the caregiver crisis is threatening long-term care insurers, right? As long-term care insurance companies are selling long-term care, they're selling a promise that this benefit is going to pay for care when you need it, right? But what kind of problem is it if someone pays a premium, they spend money for 10, 15, 20 years, and now it comes time to file a claim and they can't find a caregiver, right? Because of this caregiver shortage. Now they've spent a ton of money on a policy. This policy it's time to pay, and there's no caregivers available. And so long-term care insurance companies are thinking about how to strategically partner with providers so that they can kind of carve out providers so that they know that their policyholders are going to have a caregiver available through strategic relationships. And so, this isn't something that we've talked a lot about in the industry, but one of the benefits to having long-term care insurance might be that the carrier, that the insurance company that has that policy has a strategic relationship and is going to help ensure that policyholder has access to a caregiver. So that might be somewhat of a tertiary benefit to a long-term care insurance policy, in addition to having that care funded by the policy. One of the things that we'll see is that family caregiving has always been part of this story, but I think it's going to continue to be a bigger part of the story. ARP puts out a phenomenal study on caregiving and family caregivers, and they estimate that Americans spend about 36 billion hours caring for adults, loved ones or parents in their lives in 2021, and they estimated that economic value of that care at about $600 billion. And so the government is looking at how to increase or I should say incentivize family caregivers. Right, there are some different programs. The CMS Guide program I mentioned early on, I think, is one of those ways that they're thinking about incentivizing family caregivers, spending up to $2,500 on respite care, making that available to give family members a break, because they are going to be part of this equation, right? You see that within most homes, there is a combination of paid and unpaid help. And so within this study, they demonstrated that about 2/3 of folks receiving care have some combination of outside help. It's not just a family member providing help. So 33% of seniors receiving care are only receiving care by a loved one or a family member. And then the other 2/3 have some combination of paid help only, or both paid and unpaid help, or just unpaid help, right? Depending on folks in the community. Some depend on church groups and others in the community, nonprofits that help provide a little bit of relief and care. But 2/3 of families are providing some care, but relying on some assistance. And so family assistance is absolutely part of this equation. One of the things AARP is doing is looking at how to improve family-centered care, and specifically improve the discharge process in the hospital. And so they have developed this model legislation called the Home Alone Act, or Home Alone policy legislation where there has been this this epidemic leading up to COVID, where seniors were at home alone and no one was in the home with them. No one really understood the level of care that they needed, and that was leading to injuries, which led to more folks going to the hospital, right? And so this legislation, which has been enacted in 44 states, called the CARE Act, is going to ensure that seniors that need support have some sort of support system. And so they're putting it on the hospitals with this CARE Act to identify a family caregiver that's going to be responsible for that senior when they're discharged from the hospital. The hospital is under this CARE Act is required to notify a family caregiver of the discharge plans and give them some time and offer training to that family member to provide some medical and some nursing tasks at home. So this CARE Act, I think, is critically important as part of this equation to make sure seniors aren't being sent home without support, without somebody that's going to be responsible for their care and making sure they don't further get injured, don't further decline at home without somebody looking in and assisting them. So that's a critical, important part of the equation. So, as we're talking through kind of what Medicare is doing and some of the changes, some of the key takeaways that I would have you think about is as you're talking with clients, and maybe some of you are in med sup planning, or you are in long-term care insurance planning, and you're having these conversations about what it looks like to age in the current environment, right? And so some of the key takeaways are there's going to be a significant senior demographic growth in the next few years. In the next 5 to 10, we're going to see an explosion in the amount of seniors that need care, and we're going to begin to see how society addresses it with the caregiver shortage, right? COVID pushed more clients and care to take place in the home, and that continues to persist. Quality caregiving at home is going to ensure longevity as long as folks have the support that they need, right? And it is the choice option for consumers. Most consumers, you'll typically see in most surveys, 9 out of 10 folks want to stay home as long as possible. So quality caregiving at home is the answer if we can find the caregivers and the support necessary for seniors. And so the shortages are going to continue. I think we're going to see some creative solutions come up on how to address some of these shortages. And finally, dementia and Alzheimer's is increasing. I mentioned it's increased 70% in the last 15 years. But along with that, over the last decade plus, mortality has increased, right? We're living longer, but with that comes more chronic illness. And so folks are living longer, but there is the likelihood that with longer life, you're going to become chronically ill. You're going to need some support. You're going to need some help. And so longer care and longer care events are anticipated as we move forward to the next decade or so. And so from your position as a planner, a financial advisor, an agent, how do you begin to help your clients address some of these concerns, plan correctly, really understand or have access to information to plan? We've started in a holistic way, partnering with the insurance industry and partnering with financial advisors and partnering with planners as a senior care company to really provide a holistic senior support picture. I kind of envision it in what you see in that picture to the right there, that you have a family, and we really think that as an industry, we can come together and be this circle of support around families and seniors that are aging, right? You have your senior care advisors and elder law attorneys involved, and maybe mortgage reps if you have a family that needs a reverse mortgage or access to the equity in their home. I've heard it said that baby boomers are house rich and cash poor, right? And so I think you're going to see that accessing home equity to help pay for care is going to become a bigger reality for seniors, right? And financial advisors and agents and communities and facilities. right? We as much as we can, as we're helping plan for care and care coordination in the home, we try to partner with families and their financial advisor, right? Because we want that financial advisor involved in the planning conversation, not just to understand what the care cost is going to be, but help that family make the best decision around where that money should come from. Are they going to accelerate the best tax efficient use of their money first? Are they going to choose a tax preferential source of assets first? Are they going to make the right choice around how they fund it and what they liquidate, right? So having an advisor involved in that conversation is a big deal to make sure that family has longevity of their assets. And so one of the things that we recommend as a financial advisor that has senior clients, right? Have a senior care advisor or a home care company or a senior care company that you trust in your network to be able to lean on, so that when that senior client has questions, right, you have that person to go to. And when they get to that point where you need care, you can have a holistic care coordination conversation and plan out the care, and also have a financial resource coordination at the same time. That's something that we do in our practice. When a senior comes to us and needs care, we invite the financial advisor in to have a holistic conversation. Hey, let's plan out care. Let's think about what it's going to cost over the next year. But then let's think about what that cost might grow to in the next 3 years, right? And let's work with your financial advisor to plan out the financial resources accordingly. We do the same with insurance agents. We do a ton of work with insurance agents that sell long-term care insurance, and we help be that advocate to file the claim on behalf of the family. We have the benefit of being a home care provider, so we have access to registered nurses, and we have access to resources to come in the home and do the kind of assessment that's needed to file that long-term care insurance claim. We do an assessment of their activity of daily living and their needs, but then we'll also put together the care plan that the long-term care insurance company is going to need to approve that claim. And so we know how to package it up exactly how the long-term care insurance company and carrier is expecting to have what we call a clean claim, right? So that we know when we send off this claim is going to get approved, and that client is going to get the benefit that they deserve from that long-term care insurance policy. And so that's one of the ways that we partner with advisors and agents and other folks to help address not just the care concern or the care coordination element of the equation, but the financial resource coordination. So if you're interested in what Amada does and some of the resources and what we bring to the table, some of the other things in addition to claims advocacy, we believe in long-term care insurance, as I said, and so we do a lot of marketing with long-term care insurance agents, helping tell the story of what care really looks like, right? We're providing care for seniors all day, every day. It is a 24/7 deal, and so we can help you tell the story of what the reality of care is, what it really costs, what the duration of care really looks like for most people, right? And really help you tell that story so that your client knows what they're getting and what to expect when they buy your long-term care insurance that you might be selling or positioning to them. So we love to help folks market long-term care insurance because it is such a great funding source and helps the equation with long-term care. And then we do a lot of education webinars like this. We'll do this with clients, and if you're interested in doing a client webinar advisor just to talk about what the caregiving situation looks like, what care costs are, what they should expect, what it looks like from discharge all the way through to getting a caregiver in the home, and what kind of things are involved in that process. All of the things that families typically haven't done but need to have done, right? Like advanced care directors and having a durable power of attorney and all of those things that they may not have addressed, right? What are those things that they should be doing in preparation for this stage of life? And so education is a big part of what we do. So feel free to reach out to me. My contact information is on the right. I'll actually pull up the next screen. It's a little bit bigger here. Let's see here. Here we are. So feel free to reach out to me. There's my contact information. You can also just shoot a note to nationalaccounts@amadaseniorcare.com. Again, nationalaccounts@amadaseniorcare.com. I do want to, before we open it up for questions, I do want to shout out Brittany and the folks at Art Jetter. They have been fantastic partners of ours. We've supported quite a few of their long-term care insurance policyholders, helping them file claims and helping them find the right kind of care, whether it's in a community or a caregiver in the home. But we've really appreciated the partnership with Art Jetter. So one of the things that we do for our partners is that we do offer long-term care insurance advocacy, helping them within that claim and policy reviews. We do policy reviews and we offer that free of charge. There's no cost to the client, and we do that for our strategic partnership with Art Jetter because of this partnership. So as an agent or advisor that's in a relationship with Art Jetter, you have access to some of those services with us at no cost to your client, and that's whether they receive care from us or not. If we help them find the right community and they don't receive care at home, we still offer those services free of charge through our relationship with Art Jetter. So I'll pause there. There was probably a lot of content. I feel like I probably went through it pretty fast, Brittany, but let's open it up for questions.
Okay, well, we had a quiet group today, John, but you went through that information so splendidly. So it was a lot of great information. The common question, I feel it comes up every session, is by joining us for today's session, you will receive an email about an hour after this session from GoToWebinar that will include a link to today's replay. So if you want to go back to any of the statistics and information John covered, you're definitely going to be able to do so. So with that said, we'll let you all get back to your day. Thank you for taking time out of your afternoon to join us. And John, as always, thank you for co-piloting today's session. So our team will be standing by if you're welcome. Our team will be standing by if there are any further questions. You can reach us at 800-228-0008 or shoot us a quick email at ltci@jetter.com. Again, thank you everyone and make it a great one.